Hi, I'm JJ Conway, and I help hardworking women and a few good men build financial confidence and take ownership of their financial future. I'm cheering you on with education on financial literacy, smart investments, and passive income streams. Welcome to Ladies of Wealth.
What you're going to do in the sale, this is what I really want you to understand. Now, look, the universe, the way that God created the universe, favors action. If you just go in there and you do some things and you don't really have it all together and you don't really understand it, that is going to be more rewarding over time than somebody who takes 10 years to figure their stuff out. Okay. However, I would rather you take some months to figure some things out and then charge on in. Okay. So, this is what you want to do. You want to make sure you absolutely understand what you are bidding on. You want to understand how it works in your jurisdiction. You want to understand how much you'll ultimately pay, because in some states, especially your tax deed states, in some of your tax lien states, your bid is actually way more than the tax. And you don't have to pay that right away. You only pay that if you get the property. But you want to understand how it works in your jurisdiction. You also want to understand, if you're if you're in a jurisdiction where you're bidding on interest, how little are you willing to take? If you're in Louisiana, how little percentage of ownership are you willing to take? Because there's different ways to do the tax sale. What this is referring to when it says how much you'll ultimately pay for the property, in some tax sales, what you're bidding on is the price that you are going to pay for that property if the owner doesn't redeem. Now, remember what we said at the beginning. Everybody pays the tax. Everybody pays the tax. Whatever the tax is, you are writing that check, or you are sending that money from your bank account, or you are wiring that money today or whenever it is that you win that property. Okay. Everybody pays the tax. But if the owner doesn't redeem, your bid might be how much you're willing to pay for the house or the commercial property, because commercial properties go into tax sale all the time. Whatever you're bidding on, if that's what that jurisdiction bids on, you need to be very clear about what's the most you'll pay. Why do you need to be clear about that before you go into the auction? Because guess what happens when we go into the auction? Somebody outbids us, and then we want to bid more, and they bid more, and they bid more, and they bid more. And I'm going to tell you right now, this is one of the things that really burns me up about real estate investment gurus. I was at a tax sale at the courthouse one time, and this person was bidding and bidding on property, and the property itself was only worth $20,000, but her mentor allowed her to go as high as $40,000. And I said to him, I didn't know that she was his mentee at the time. I didn't know that she had paid him like $10,000 to teach her how to invest in real estate. But I found that out later. I leaned over to him. I'm like, well, I can't believe she's paying so much for that. And I showed him my thing. I'm like, I would only have paid 20. And I knew him, so that's why I was talking with him. And he showed me his thing, and his thing said 20 as well. And later on, I found out that he was mentoring her, because we were having this conversation while she's doing the paperwork, and she comes back and she's so excited, and thank you for mentoring me. And I looked over at him and I was so disappointed, because like, you just let her pay double for the property than she needed to pay, because she got caught up in the excitement of, I'm going to win, I'm going to win, I'm going to win. And so you want to be very, very clear on what it is you're going to pay for the property, so that you know where your stopping points are. And you know how high you're going to go, and what's your max bid, and what's going to be profitable. See, we're not just trying to acquire property. We're trying to profit. The goal isn't just bills. The goal is to make bills. We're not just trying to go out there and acquire and pay all this money. We want cash flow. That's why they call me the queen of cash flow. I hate to rain on your parade, but you can have 65 doors and be upside down. And to me, that is not wise investing. It's only wise investing when you've got cash flow, because most of us don't have enough cash as it is to be in debt and be upside down in somebody else's properties. I'm here trying to show you how to make money, not lose money. You got $100 million, you've got $2 million, and you want to overpay at a tax sale. I'm gonna let you overpay at a tax sale because your goal may not be profit. Your goal may be acquisition. I want land mass. I don't care how much I have to pay for it. I'm getting these properties. Okay. That's why you have to know what it is you want to do, how much you'll ultimately pay. What are your goals? What are your profit points? And if your goal isn't a profit point, you gotta know that before you go into the sale. Okay. Second bullet here, how little interest you're willing to take. Some jurisdictions, when you bid in the tax sale, you're actually bidding down the interest. So that jurisdiction may give you 24% interest, 1-year redemption, or 24% interest, 18-month redemption. Whatever the interest is, investor A says, well, I'll take 20% interest. And investor B says, well, I'll take 18. And A goes down to 15. And they go down and down and down and down, 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 down. And eventually you get down to basically about what the market is, 8 to 10 to 12%. Okay. You have to be very clear on what you're willing to take on for that property. Because if you bid it all the way down to 3 or 4% interest, well, you could put your money in the stock market and get that and not have to pay tax and not have to get billing notices from the city because nobody mowed the yard. You don't have to deal with any of that kind of stuff. So why would you do that? I would not do that unless your goal was acquisition and you were willing to do that because you're trying to acquire more property. Do you see why it's so important to understand what your goals are? It's very important to understand what your goals are, because too many of us have an acquisition strategy when our goal is actually cash flow. And then we're hamstrung later on when we don't have enough cash flow to fund our dreams. And says how little percentage ownership you're willing to take. I think Louisiana is the only one that does this. But what this bullet is referring to is the bidding process in states that do bidding as part of ownership of the house. So in Louisiana, everybody starts off at 100% ownership. And this investor says, I'll take 99% ownership. That investor says, I'll take 50% ownership. This investor says, I'll take 39% ownership. And you bid all the way down. And if everybody bids down to 1%, then the first investor to down to 1% wins. So when I first got started in Louisiana tax sales, don't necessarily recommend this unless you've done your research. But when I first got started in Louisiana tax sales, one of the things that I would do is I'd line up all the properties I want to bid at, and I'd go 1%, 1%, 1%, 1%, 1%, 1%. And I would get them too. I would get them. I'm going to get these properties, and I would pay the tax. And generally speaking, because I picked good properties that are likely to result in me getting my money back, they would redeem the property and I would get my money back. Okay. So there's only one from those couple of years where I did it that way that never got redeemed. It's the one that me and the bank still own together. But I'm a 4% owner on that. And I don't know what I was thinking. You know what I was just doing? I'll be honest with you. I wasn't thinking, I was just doing. I saw an empty tract of land in a swanky neighborhood and I said, getting it. Well, I got it all right. We'll talk. If you take the follow-on class, you're going to hear about that plot of land a lot, because there are so many mistakes I made with that plot of land, and it's still going to profit me. It's still going to profit me, but there were a lot of mistakes. Like, I would not buy that plot of land again if I knew now what I knew then. But who knows if it gives me if the bank hits my dollar sign and they buy me out, then we're good. But I'll talk about that later. Okay, I was talking about Louisiana. Okay, so in those cases, it's how little percent ownership you're willing to take. That's what this bottom one refers to. in that section. And so what I do now with Louisiana is I don't do 1% bids. I made money, that was great, but I really want property. So I only do 100% bids, which means if they don't redeem it, it's automatically mine. I'm already in the tax records. In the tax records, my IRA is already the 100% owner. So that property is mine if they don't redeem. Okay. And so please don't mess up my hair when I'm on a call. Okay. All right. So you want to understand your profit centers. You want to understand what you're bidding on. You want to understand how the bidding works. The other thing you want to understand the payment policies. Yep. Because remember, you always pay the tax, but in some jurisdictions, you're going to pay more. And you want to know when they need the funds, because some of the tax sales I do, you have to have that money into them by 2 o'clock the next day. Some of the sales that I've gone to, especially since I moved to rural Texas, they need that money on the spot, because that person who is executing the sale for that county, he's executing the sale at your courthouse, and he's driving an hour into the next rural town to put a sale at that courthouse, driving another hour to the next rural town to put a sale at that. He's not going to be back to get that money. You got to get that money now. Okay. And so it's very interesting how different jurisdictions work. And you want to understand that, because what you don't want to do is lose out on a property, or more importantly, in an area where people are doing the sale locally. You don't want to ruin your relationships. Okay. All right. So you want to understand the policies. You want to understand when you have to pay. You want to understand how you have to pay. Okay. Those are things that you want to understand before the sale. You have time now. Most of these sales are in June and May and July. You have time now to do it. Okay. So you understand what you're buying, or you're attempting to buy, how you buy it, how you pay for it. You want to get your list of the properties that are available. You got to understand. That as the tax sale approaches, a lot of the properties are going to fall off the list, because people are going to be like, oh no, my house is about to get sold to somebody else. Let me pay that bill. I mean, that's part of the motivation for why they do it, right? That's part of the motivation for why jurisdictions do it. Okay. So you want to make sure that you take the list, understand that your favorite properties may not be on there, but take the list and go start doing your due diligence. Okay. Now I have this 3Bs here. I know there are a lot of online sales now, but if it's in person, keep in mind that if it's in person, you got to be there. You got to be ready to bid, prepared with your information and your due diligence. And then you got to be ready to pay. All right. You want to pay. If you're the highest bidder, you want to make sure that you can pay right away. All right. Again, if you're just joining us and you would like the slides, you can scan that QR code, or you can go to jjclink.com/tax slides, and you can get yourself a copy of those slides. If you're doing an online sale, you're going to have to register. Now, each jurisdiction is different. Some of them, like if you're in Civic Source, I think you can register a couple weeks out. It doesn't have to be a couple months out. But some of these systems, you got to register a couple months out, and you got to register before they'll even give you the list. And then when you register, you've got to put up your you've got to put up some funds. You've got to connect a bank account, or you've got to send them some funds. You want to give yourself time for all that to work itself out. Okay. Because it could take a couple days for those funds to clear, depending on how you send them the funds. They're going to verify your identity, and they're going to want to have funds. They're going to have initial funds in the system, or a connection to a bank account in the system, whatever their process is. Okay. Some of the ones in Texas, that you put it like a $1,000 deposit, or you put a small deposit, or you put a deposit for whatever you're looking to bid out. So it's just going to depend jurisdiction by jurisdiction, but you don't want to wait till the day before the tax sale, which again, that's why we're doing this class now, when the tax sales aren't for another couple of months. Okay. In most jurisdictions. So you want to start now. You want to go into that. If your jurisdiction uses Civic Source, set that account up now. If your jurisdiction uses something else, set that up now. Get those things set up, get your bank account connected. If they need an initial deposit, go ahead and send that on in. Give it time to work its way through the wickets. Okay. You don't want to be caught out at the last minute and miss out on your profit. Okay. The other thing you're going to want to do, and y'all, this is messed up. Okay. I've been doing, when was my first Louisiana tax sale? It was 2017. So that's 17, 18, 19, 20, 21, 22, 23, 24. 8 years of tax sales. Okay. And I'd say 3 of those years, the first year was my fault. I put my name, it said name. So I put Janine Conway, like that's my name. And it said driver's license number, and I put my driver's license number, and I went through all of that rigmarole. Well, I didn't know that was the titling instructions. It doesn't say, if you're using CivicSource, you want to be aware of this. It does not say titling instructions. Put the name that you want the properties to be titled. It doesn't say that. It just says name. And it asks you for other document details that make it sound like it's an identity page, not a what's it called? Titling page. They really need to make that more clear. But last year we had an issue where I had a couple good years in a row where it had my IRA in there, couple good years where I wasn't on the properties. Yay, finally got that anonymity that you want. And then last year, for some reason, it was my IRA and my name. And I'm like, and I went around and around with CivicSource. I'm like, y'all need to fix this. And they're like, well, that's $900 to fix it. And I'm just like, y'all need to fix this. Well, that's what was in the system. Well, I guarantee you I didn't put it in the system. I done been doing these taxes for 8 years in a row now. And after the first one, when they all came back titled in the name Janine Conway, I was like, I don't want my name out there. I want those properties to be titled in the name of my, of Equity Trust, not me. I want them for the benefit of my account, not me. I don't need a lawsuit. I don't need you tripping on my property and trying to sue me for it. I really don't need all of that. I need as much anonymity as possible. My goal is to do like many wealthier people do, which is they have nothing on paper. It is not their name. It is their company. It is in their trust. It's like they're not even there. But somehow they have all the luxuries of life. But what can you get? They limit their liability in those ways. So you really want to make sure that you check your titling instructions. All right. And with mine, I found out with Equity Trust, you can actually create an LLC to be used as your IRA. So if that's something that is appealing to you, then you could do that. Okay. But you want to make sure you set the titling instructions up properly. And before you bid, make sure they're still right. Because I'm telling you, I guarantee you, I have not changed my CivicSource settings since we fixed it 6 or 7 years ago, whenever it was we fixed it. I have not changed it, but somehow my name showed up on the tax records. Okay. So you want to make sure you check it right before you bid. You want to give yourself some time to do that. It's so important to make sure your titling is important. And make sure your titling is accurate, because once it's done, it's very expensive to get that changed. And in some jurisdictions, let me go ahead and say this. Let me look at y'all again. In some jurisdictions, you can change the titling on paper, but your name is forever associated with that property. So keep that in mind. Okay. When you, if you do an online sale, you're going to use a click to bid, and you got to be ready to pay right away. Now, I do know that CivicSource will give you 3 days to pay. I don't know how other jurisdictions do it, because this is going to be my first year actually buying instead of looking over the shoulder. It's going to be my first year of actually buying the Texas tax deeds, and I actually don't remember, because the ones that I looked over the shoulder last year, she had enough money in the online account to cover for it, so she just paid it out of what she had already deposited. But you just want to make sure that you're ready to pay. Okay. This is the class. All right. I'm going to tell you all about the class. We are doing the class this year. We are doing the class this year. However, it's a modified version of the class because in the past, what I've done is I've taken partners. We've done an earn while you learn. And so you've been able to partner with me and partner in the profit. It's kind of a joint venture kind of thing. Okay. I'm not doing that this year because this year I'm going to focus on Texas tax deeds. And this is the first time that I'm physically buying them all by myself like a big girl. Okay. And so in the past, I've been partnering with others so I could learn the process. And just one of the things about me, if I'm going to ask you to pay $1,000 for a class, I want to have all the things. Well, this year, I'm not doing Maryland tax sales, and I'm probably not doing Louisiana tax sales. I'm not going to write them off. They've been very profitable for me, but I really want to focus my funds and my attention on local Texas properties. And so if I'm going to do something new like that, I'm not going to do like the people on the YouTube ads. Oh, pay my $1,000 and you're going to be amazed. Blah, blah, blah. I don't know if you're going to be amazed. I don't know. I don't know how much money I'm going to make. I don't know. I've never done it before. I don't want to take your money and lose it. It's, if we're joint venturing, we're losing together. I'm not on the hook for whether we win or lose your money. But if you're going to partner with me, my business is still small enough. I don't want people to lose money. I need the people to make money so that they can bring more people to me and we can grow the business. When I've got 100,000 students, I can afford one or two of them to not do so well and maybe, reimburse their money or something, but I can't reimburse your money. Now you actually, when we partner together, you sign something that says we are partnering. This is not an investment and I'm not guaranteeing nothing. But I still don't want to take your money and work together if I don't know that you're going to win. So what we are doing with the class, is instead of charging $1,000 like we've done in the past, and instead of charging $499 like we did last year, $500 last year, we are only charging $99 because this is going to look over your shoulder. So I'm basically going to walk you through everything that I did, everything that I do. So last year, I don't know if anybody who took the class last year was on. Last year, people actually I made a video of the tax sale. I screen grabbed my taxes, my bids. I screen grabbed all the good, the bad, the ugly. You even heard me going through it like, oh no, how did my name get in there? Oh, it was so funny, but it was real talk. And then I made the videos of the properties that I won. We went out there and I made videos of the properties, and I made videos of me talking with the neighbors about the properties and about the owner and whether or not they're likely to redeem. Like that's something that people got in those. While I was very confident in those, you're still going to get that here, but we're dropping the price down to $99 because I don't know how it's going to go. I might get in there and be like, nope, not buying nothing, and then you're still going to get plenty of value from the ramp up to the sale, right? You're from the ramp up and the research and how you do it and how you set up the system and all that. So I like to make sure that I know I can deliver, if I can just be real for a second. There was a video I made a little while ago that I realized that, especially with the Juneteenth conference, I had a lot of broken promises out there. I thought something had been done and it wasn't done. And it wasn't just one thing. I thought that people had the videos. I thought the people who bought lifetime access to the course had their lifetime access. I thought that this and I thought that was done, and I thought this went out and I thought that went out. And then I had one of our speakers and authors is like, hey, I still haven't received anything. And I'm like, I've recorded multiple updates on this conference. And so when I start digging into my processes and I found out, oh my goodness, they never got what they paid for. Like I truly appreciate, if any of y'all are watching today, I truly appreciate the fact that y'all didn't do chargebacks on me. But we're not doing that anymore. Okay. Well, I'm making sure I'm getting everything caught up. And so far I've gotten almost everything caught up. The only thing left that hasn't been delivered is some of the Juneteenth deliverables, but I don't want that to happen with real estate. And I'm going to give you everything I can give you. but I already know I got a lot going on, and I already know that this is going to be a new ground for me. So this year it's only $99, and that's basically covering my hosting for all of the stuff that you're going to be getting, all the videos and the documents and all that stuff. That's basically all it's covering. So if you're interested in that, make sure you go out to jjclink.com/tax sales. We are only taking a limited number in this class. Now, look, y'all rarely hear me say that, because usually I'm like, everybody come on in, everybody come on in. But this is looking over the shoulder. This is hands-on, and I'm limiting how many people can come in, because it's a deeper level of instruction than just me getting in here and talking in front of a camera. Like we're literally going in, and I'm showing you. You're going to see the bids, you're going to see the things, and you're going to dig into those and be able to ask the questions about those. And I can't serve too many people with excellence, so we're going to neck that down, and we're only going to have a handful of people in that class. And I hope that you will be one of them, especially if you have been wanting to invest and you've been afraid to get out in there. Next thing we're going to talk about is the high bid premium. Remember earlier I said that in some tax lien states and in some tax deed states, you are paying more than the tax for the property. You are bidding more than the tax for the property. And so what happens in that situation is, if you bid too much, okay, if you bid too much, then you have to pay a premium on the amount that that state or county or city thinks is too much. And that premium you have to pay on that extra amount that they think you're overpaying for the property, that is called the high bid premium. Your high bid is because you bid more than the county thinks that the property is worth. The premium is the fee you pay for making that bid. Okay, now it's going to be some math on the next slide. I'm about to show you some math. Please don't hang up. Please don't drop off. Hang with me. If you are in a state that does this, you want to understand this, because this is confusing for a lot of people, and it's so confusing that sometimes people don't bid on a property they actually could bid on. So let's go and see that slide. All right, so in this example on the slide, the property is assessed to be worth $100,000. Okay, and this is a jurisdiction that charges a high bid premium, which we are calling HBP, and that is a 40% high bid jurisdiction. Okay, what that means is 40% of the assessed value of the house in that county is $40,000. Anything you bid over $40,000, you got to pay an extra fee on. So in this case, let's say you bid $50,000. Let me remind everybody, usually at the time of the sale, you're paying the tax. In a lot of these jurisdictions, you're not paying the full price that you bid unless the owner doesn't redeem, and then you go in and you get it, okay? Then you get the property. But in this situation, their high bid premium is a 40% of assessed value. The house is worth $100,000. If you bid anything, because 40% of that is $40,000, if you bid anything more than that, you got to pay a premium on the difference. So you bid $50,000 for that house, still a really good deal. And the amount that you have to pay a premium on is $10,000. That's the 50 minus the 40 leaves 10. You got to pay a premium on the 10. Okay. And then you need to know the percentage. Okay. The percentage of the premium is a 20%. Okay. This is why I'm explaining it, because it gets so confusing to people that they either don't set aside enough money, or they get scared and they run away, and they actually could have made money, or they could have bought a property pennies on the dollar. Okay. So in this case, let's walk through it one more time. The house is worth 100. It's a 40% high bid premium jurisdiction. In that jurisdiction, whatever you pay, the percentage of premium is 20%. Okay. The house is worth 100. The high bid premium number is 40. You bid 50. There's a difference of 10. So now you got to pay 20% on that 10. That's $2,000. So you're going to pay in this jurisdiction when the bid finishes, you're going to pay the tax. Let's say it's $1,000 plus a high bid premium. That's what you're going to pay at the time of the sale in that jurisdiction. Now, everybody does it different. You got to find out the rules for your jurisdiction. But I don't want you to be too afraid of the high bid premium. I want you to plan for it, budget for it, account for it, but don't run from it. Because if the numbers work, then the numbers work. And if the numbers work, you got to make them work for you. I already kind of said the high bid premium is added to the tax you're paying and is later applied to your purchase price if you end up actually getting the property. But look at this. You typically will not earn interest on the high bid premium. In this example, you're going to pay the $1,000 of tax plus an extra $2,000 because you overbid. Okay, what they think the value of the property is worth. But to you, it was worth it. So you're out of pocket $3,000. If they redeem the price, you get your interest on that first $1,000. So this is a 18% county. You're going to get $1,180 back when they redeem, if they redeem. You're also going to get the $2,000 of hybrid premium, but you're not going to earn interest on that. You will get it back, but you don't get interest on that. Okay. So this is to kind of prevent, this is one of those things that, this is one of the things that can be real frustrating as an investor. But I actually think this is a good rule because what this does is it prevents people who are super wealthy from just snapping up all the poor people's properties. They still can if they want to spend that extra money, but the higher you offer to pay for the property, the more you're going to have to pay in high bid premium, and you're going to have to pay it right away, and you're not going to make any money out of that. And if there's anything that most wealthy people I know can't stand, it's to not be making money off of their money. All right, so keep that in mind. You're listening to us, I'm part of the podcast today. We record these live every Thursday, but real estate is every third Thursday. And so every first Thursday is Q&A. Second Thursday is 7-figure business building, how to create multiple streams of income. Third Thursday is real estate investing. Fourth Thursday is the empowered entrepreneur, how to become the person who can be, do, and have the things that you want out of life. And so with that lineup, it's a fantastic Thursday night class. And I hope that you will join me on the next one. That's all I've got for you today. I'm JJ Conway. Thank you so much for watching, or if you're listening, thank you for listening on the podcast. Y'all take care and be blessed.
Don't forget to like this episode, subscribe to the channel, and ask your question at ladiesofwealth.com.